to my YouTube channel everybody. This is Mohak Pachisia और आज मैं लेकर आया हूँ आप लोगों के लिए. I've got for you today a special kind of a video. We are going to discuss 5 stocks and how one can trade technically during intraday market hours. Now most technical analysts or trainers or anybody who is considered to be an expert generally gives the advice or generally shows what they're seeing on the chart before the day or after the day and during the market hours when the markets are very fast, which I believe is that one can only amongst the retail traders who follow people like myself, one can only actually make apply the technical principles during even live markets. So आज हम देखते हैं that how we can trade amongst these 5 stocks. If today you were trading, what are the basic technical principles you would have seen in order to make the most of your trading day? Okay, and इसमें मैं एक चीज बता दूं आगे बढ़ने से पहले कि ज्यादा indicators या ज्यादा कोई तामझाम की जरूरत नहीं है. What you need is a clarity of thought, and you need to track the stocks. So these are the 5 stocks I was tracking, and there were many more, but I'm going to explain these 5. Okay, so the first of all is Dr. Reddy, and there was a break of the support zone at around 5030, which was very crucial for Dr. Reddy. So if you are trading Dr. Reddy today, one of the things which you may have tracked, if you were tracking technically like I was, that in the last few days the stock has been in a small range. Okay, the stock has been in a small range. Now this is the daily chart of Dr. Reddy right in front of you. This is the daily chart, and it is a strong, very strong uptrend towards lifetime highs, etc. Now we have got the weekly chart again very strong. Now coming down to the hourly chart, when you come to the hourly chart, what you see is that there is a very small range in which Dr. Reddy was moving. Okay, so very often what happens is that jab kabhi you are against the longer term trend, okay, a lot of trades don't work out, but they work out with the pressure of the intraday. So we saw that during the market hours there was a break and a significant fall on this stock. So this area which I put on the 5-minute chart now, and according to my RSI indicator, which I look for the range shifting and the RSI ranges, was hovering between 40 and 60, which is like a sideways range. Okay, so one thing is pretty clear, that when it is hitting 60 again and again, it is surely not that bullish according to the RSI range principle. Okay, and this is by Andrew Cardwell, and I also teach this to my students. Okay, so the first time I read about this principle was from a book in by Constance M. Brown. Okay, and this principle is pretty clearly telling us that the market range is sideways right now. Secondly, is that today's intraday high and the middle highs in the middle of the day were again making the RSI go just in kissing 50 or just kissing 60 or near about 60 areas. And finally, what happened is what I'm going to zoom in and show you is that this line drawn very clearly according to yesterday's and 3 days back's low, this exact line which is coming around to 5027, okay, around these lows, that's 5030 around zone, the market came and touched this level. So my eyes went on to this stock when the market came and touched this level, and when I saw that there's a consolidation happening right above this, the market was gathering the steam to actually break this zone. Okay, now I like to do one thing which again I read in a book while I was completing my third level of chartered market technician. I don't remember the author's name, but then there was a principle in which I used to flip the charts. Okay, and I follow it sometimes. So during the market hours, what I did to decipher this trade was I flipped the charts, and I could see that around the 5027 levels or 5030 levels, there's a bullish breakout coming. Therefore, after flipping the chart, if something is bullish, that definitely means that right now it is bearish. Okay, so it's just like a simple opposite of things. Okay, but then the picture becomes more objective to you. So anybody who would have sold Dr. Reddy at 5030 or 5027 levels could potentially get a low of almost 120 points or so. Okay, So 120 points, the lot size is pretty big, and you could actually make a good amount of money in a short period of time, okay, by applying one technical principle. You don't need to take thousands of trades, you don't need to take tens of trades every day, but take one or two trades and take them very, very well. Sometimes three also. I mean, depends on you. That actually makes a lot of difference. Okay. Next up is Tata Steel. Tata Steel I'm going to discuss with you, and this is particularly for a volatile day like today for intraday traders. And this is one of the stock which was on my radar as well as in the radar of some of my students. Okay. So this on in front of you is a 5-minute chart of Tata Steel. I'm going to open the daily chart and show you initially in the morning why Tata Steel could have been a very good potential buy according to technical principles. So this is the daily chart of Tata Steel. Okay. On the daily chart, I see that this major level of 388.3 or 0.27, somewhere around this zone, has been broken just a few days back. Okay. So I'm going to show it to you on the hourly chart how this looks like. This has been broken just a few days back. Okay. And the market in the next 2 days has taken some small rest over here. Okay. It has rested over here. So one thing which was on my radar is that if this stock is resting, that means this is following a throwback. There's a principle of throwback in technical analysis, which means that a particular resistance later on tends to behave like a support, and immediately after breaking the resistance, the price comes and rests upon it very smoothly and slightly, and then really begins an up move. Okay, so this was on my radar, and moreover, what happened in the pre-market, one could see Tata Steel was going to open a bit higher, or there was some bullishness hidden in the pre-market rates. Okay, so if you open the 5-minute chart of Tata Steel and you see the first 5 minute, you can take a position on the basis of a higher high, which is just basic trend following and Dow theory, and the breakout gap or a small gap which has happened over here. Okay, so basically the price opens, makes a hammer like pattern. Now this is not an ideal position for a hammer, but what I'm trying to say is that this candle is representing the fact that the price has gapped up, taken a rest in the area of the gap, and gone back up. So this last high has been a good area, so this could be a good stop loss, whereas a good entry point could be a high above the first candle or the close of the second candle. The close of the second candle, because it's closing above the high of previous day. Okay, so you can get it anywhere, and you could keep a stop loss which is modest, and you could get those immediate morning trades. Okay, these are how I track morning trades. Okay, so this is one trade. If you've taken this trade in the morning and the high goes all the way during it all the way up to almost 408, what I'm trying to say is that if you've taken such a trade in the morning, okay, then you can keep your capital free and your mind free for fresher trades later in the day, like the ones we saw on Dr. Reddy. Okay. So this is the thing. Now, the common characteristic between both these trades was that I was following both these stocks for quite a while, and amidst following these stocks, I ended up getting some really interesting trades. Okay. Next up is Hero MotoCorp. Now, Hero Moto has been a brilliant short-term fall. It's shown as a nice corrective movement, or at least downtrending movement. And in front of you, the chart, you can see within the last day, which I've shown, is that there's a minor pullback in the morning and there is a fall later in the day. So the point over here, what I'm trying to make is that yesterday on this chart, the stock has touched the 60 zone or come near the 60 zone while it has been on a consistent downtrend. Okay. Now, what actually got me onto looking at Hiromoto particularly are the daily charts. Okay. Now, Hiromoto is something which is a likable stock. It's been a long-term, medium-term uptrend. Okay. You can say that's a medium-term uptrend, definitely. Okay. But over here, what really makes a very bearish undertone is that there is something which looks like two shooting stars, one after the other. Now the second one, or the topping candle, is not a shooting star, but the thing is that these zones have given so much pressure on the stock that the higher levels have been rejected. Okay, now this was still fine. What happened 2 days back was there was a sudden fall which caused a big bearish engulfing candle, which is engulfing 1, 2, 3, 4, 5 candles. So I'm seeing that there is a lot of bearishness over here on the stock, and there should be some sort of follow through. of this bearishness, and that should not take a lot of time. What happened yesterday was pretty much a candle which looks like this on the daily chart, that it closed negative, but the intraday movement was that of a pullback. So we have completed a fall, we have completed a pullback, and in the morning what you get is another mouth-watering pullback. Okay, so where could one go short on these on the stock? One could go short either at the pullback by taking a good risk reward of the high of this previous day, or one could see that in the first 1 hour or so. So by 10:15, what is happening is this stock is crossing the previous 2 days lows. So this is yesterday's low, and this is the day before yesterday's low at the same zone. This calls for a very good short-term intraday short position. And then the price is tending to trend towards all the way towards 3136. So that is almost a 100 point or 95 point fall on a 3,100 3,200 rupee stock. So this is quite a good decent movement for intraday traders. So some of my students who traded this have planned how to go about it by using principles, very basic principles of technical analysis. And I always encourage people to keep the variables number low, but use a combination of variables to decipher any trade that you're going to. Okay, so this was Hero MotoCorp for you, and none of it, and you can kind of get all these kind of things almost on daily basis. Okay, intraday trades are always, intraday movements are always going on, trades are always available. It's just that you have to be patient to be at the right stock at the right time, and you have to find those trading spaces. For that, you need to prepare. Okay, now let's look at Nifty. Nifty is one of the most interesting movements today, and I was having Nifty puts. I bought Nifty puts myself just a few minutes before this fall happened. This maximum fall that you see over here. Now, what I'm getting to over here, do you see this red line which I have made? This red line is at the high of something which happened about 4 trading sessions back. Okay, so what happened 4 trading sessions back? That there was a very major fall. Okay, 1, 2, 3, 4. There was a major fall which created an engulfing pattern on the daily chart. Now, generally, you don't see the market going up, going down, and suddenly going up. Okay, markets when they go down, they are far more volatile than when they come up. And even if there were a very strong trend, there would be some sort of a very wide basing, and the price would shoot up after that. So the market should actually have had more correction, or sort of more sideways movement than it did. So as an alternative to that, as an alternative to absorbing some time correction, it is given us a step-by-step movement. So I appreciate the step-by-step movement. It is bullish in its essence, etc. But I want to see what has happened at this major supply zone. What has happened at these zones where bears are sitting very, very strongly. So come on, let's go and look at the daily charts on my charting software once again. Hang on. So I'm going to just open for you the chart of Nifty. Here you go. So this is the daily chart of Nifty. This is the candle which I was talking about 4 days back. It was a massive fall, and the high of the candle is the zone where I've actually made this particular, the high of the candle is around 12,025, and somewhere around this is the line which I made, the red colored line. Okay, and what you see in front of you is a 15-minute chart. Okay, what's interesting is that after today's morning gap up and a follow through of that gap, the price was falling shy of this zone. So if I open it on the 5 minute, you'll be able to see it clearly. So when price came over here around 12,016, it stumbled. Fine, no problem. It could be corrective, no problem. Then when price comes over here and then again touches, you can see the high on this part of my screen. You can see the high is 12,016. You can see the high is 12,018.65, which is just 2 points close to each other. Now this is called a double top pattern. Now this is called double top pattern. Now conventionally, people who like to not learn from a course but like to go to YouTube videos and see, they will not understand why this is a double top. But let me tell you, this is an ideal double top, which is a very wide pattern. So it has taken and absorbed a lot of time correction. Now let's understand the support zone over here at 11,980 is where the price actually came and was stopping. So this is a support zone. This support zone was fiercely broken. So one could easily go short either. In my case, I was short with the trend. So I was like few points before the major fall started. But if somebody is looking to go short after seeing the bearishness also, the risk reward still is fine, not a problem. You could go short even a few points lower than the support break and participate. As you participate, you see there's a massive fall. If I consider the support break at 11,980, the massive fall is all the way till 11,777. So you can see that there's almost 200-point fall, so which is a massive. Okay, so in between that there is a important zone, an important zone which is this zone. So this is the place from where some massive interactions have happened in between price. So this is how to identify these zones, is one of the first things which I teach in my course. So when the price thuds and breaks this zone, I'm pretty clear that there's some extension left. It's not going to just stop all of a sudden. And yes, the band of 11,820 to 11,800 is an important band. Now the last part of the move, you don't try and become over smart. Okay, the price has come to the lowest, one of the lowest possible ranges, which is this breakout gap zone. And just hang out, just hang on. I'll just give me one moment. This video is just one moment, please. Okay, so do I continue? Yeah, I think the recording is fine now. Okay, so what I'm coming to over here is that this is a breakout gap which happened over here. And one important zone is the starting range of this gap. So the price comes and touches all the way to this point where it takes some cushion and then goes back flying. Okay, so there is a lot over here to understand, to sort of emulate, to make some sense of. And if you are trading a volatile day like this, one of the things which you have to do is hold on to the trend massively. If I open the 1 minute chart, you just see how massive this trend is. And an intraday movement could of this category could actually make you a lot of money. The second thing is that if you want to trade this pullback, then there is a cluster of candles bottom on the 5 minute chart, and on the 15 minute chart there is a potential morning star pattern which is happening. Okay, so this is a little bit of advanced stuff, so I'm not getting too much into that. But from a pattern recognition point of view, or from a resistance point of view, which I can easily see that happened once, twice, and now the third time, I could actually relate that there would be something bearishness, some bearishness that could potentially be there. The magnitude of it, of course, nobody gets to know from before, but the market rewards the person who is alert for these kind of signals. Okay. Now, the next thing which we are getting on to after Nifty, so we have completed Nifty. Now the last stock for the day, which I'm going to take, is Reliance. Okay, Reliance is very interesting. I think again something pretty similar, but not the same. Similar but not the same. That's what technical analysis is about. Similar but not the same. So herein, what I've been doing is that in the last few days, I've been tracking Reliance. This is one stock where a lot of trading happens. Obviously, people are constantly trading and the volumes are pretty high, etc. So in the last few daily charts, what I've been seeing is that in the stock Reliance, that there was an attempt to break out. I would not use the word breakout in this case. Let me just show you. Yeah. Okay. You could say that breakout from these higher zones. Okay. But these strong resistance areas, which actually overshadowed the bulls, now the price was below this area. And now this area became very important for me. That's around 2230 zone or 2225 zone. Price is again taking resistance over here, and in the last few days it's just moving sideways. Okay, so as it is moving sideways, if I open the 15-minute chart and apply that RSI range principle, it still is in place. So around 60, 62, around 60, 62 even today morning. And then there is a constant low of the last 2 days which is broken together at the same time. So trades like these or opportunities like these, where I see that a good zone is broken of the last 2 days put together, is a good strategy to go ahead with. And even though this is not a pattern, I'm just talking about a support break, okay? But the essence which we get from it would be that of somewhat like a descending triangle. I mean, it's just the essence which I'm talking about. It's not a pattern actually, okay? So one of the contributors also to the market breadth and the Nifty downfall, and one of the major movers of today. Okay, so intraday Reliance went down pretty badly, and the undertone of the bearishness which was still there. Okay, the bearish undertone was there on the daily charts that followed through. So these are the kind of trades you could take in intraday, regardless of whether you use a sort of a fancy indicator or not, or whether you have subscribed to some best analyst or follow somebody on some social media or not. What I'm just trying to say is that preparation and keen observation during market hours can lead you to amazing things. And that's it. You don't have to worry about anything else. A few trades like this, even during the entire week, a few trades like this, okay, or a few handful of trades like this during the entire month could actually benefit you a lot. This is just one example of one day. I would encourage all of you to share this video with your friend, subscribe to my channel, view so many other videos which are there for your own learning. And if you do so, that would encourage me to make more videos. If you're following me on Twitter or Telegram, etc., do look at the various videos, the blogs, some ideas, some knowledge which I share with people. I love sharing knowledge. And of course, if you want to find out more about me, you can go to www.technicallysorted.com. So until then, thank you so much. Goodbye, good night, take care, and enjoy.